buy 0.28 Bitcoin and then stop. Please just stop for a moment. This might sound odd to a lot of people. It might seem like there's some magic number of Bitcoin, or that you should always stack Bitcoin, or, since it's probably going to outperform, that you should go 100% into Bitcoin. And I just want to talk through this because there's just a massive hack in what a lot of Bitcoiners thought was the safest place to put Bitcoin. I'm noticing there's a lot of anxiety around that. I'm noticing there's a lot of anxiety in the Bitcoin space just in general, which isn't always the case in other investments. Of course, sure, like if you have rental properties, maybe the commercial space, there's some anxiety when you have to refinance and rates are going higher, but a lot of investors do not feel the same stress that crypto investors feel. So let's talk about where the market's at, why stopping at 0.28 Bitcoin actually makes a lot of sense, what I'm doing, like why I kind of preach this principle, or why I'm preaching it now, fully knowing now is probably one of the better times, one of the best times to buy Bitcoin. And it will all make sense by the end of the video, hopefully. If you don't mind, hit subscribe so you can see a future video just like this one. If you hit subscribe, then YouTube will push you more videos like this. If you want to trade crypto, check out the links underneath the video to BitFi and to Ubit and to BTCC. I've been seeing some crazy stuff about Bitmart, which is one of what I thought was one of the more well-known exchanges. Apparently, they've frozen funds. This is one of the reasons that I think it makes sense to have multiple exchanges, not just one, because there are some weird things that happen, but I've only had good experiences with these exchanges. So if you want to check them out, they're linked in the link tree. Now, 0.28 Bitcoin. Is it the magic number for everyone? No. What it is right now there are about 60 to 70 million millionaires in the world. Of course, this changes all the time. It's probably higher than 60 million, which is what it was last time I looked officially. There's 18 million Bitcoin, 17 million Bitcoin, maybe even a little bit less if you account for, all the Bitcoin that's been lost over time. But it basically works out so that every millionaire can have somewhere around a quarter to 0.3 Bitcoin. So let's call it 0.28 Bitcoin. Obviously, there are a lot of people that hold more than one Bitcoin, that hold more than 0.28 Bitcoin. So the realistic amount that you can hold is less than that. But 0.28 Bitcoin at today's prices is still a significant amount of money. So 0.28 times 65,000, we'll call it. Let's say you buy at a bad time. Right now, Bitcoin's at 64.6, but that's about $18,000. Now, there are a lot of people that watch this channel that are worth $18,000. There are a lot of people in the world, in the US, that are worth $18,000. The median person in their 40s is worth much more than this. Even in your 30s is usually worth much more than this. So this is an achievable amount of Bitcoin to buy. Why do I say, though, to stop? Obviously, that's a big psychological number. You have more than the average millionaire can have, and you're doing it for 1/50th the amount of money that you need to actually become a millionaire. During the next bull run too, let's say Bitcoin goes up to 50% more than where it was last cycle. Let's say it goes up to 187,000 or so. Well, that 0.28 Bitcoin would then be worth about $50,000, a little bit more than $50,000. Let's call it 50,000 after tax. Okay, that is a good amount of real dollar value from under 20,000. That would springboard a lot of people to be able to, maybe, you should stay away from the flashy, cars and stuff like that, but might springboard you into buying the house you really want. Might help you buy a rental property. Might help you feel a little bit more comfortable buying a business or starting your business. Might help you just take profits and diversify into other assets. So it's a significant amount of money, even if we just get a little bit past all-time highs, 50% more. Is it life-changing? Is it life-changing? Yes. Can you retire on $50,000? No. So it's not like every single problem is solved at 0.28 Bitcoin. And this is relative, right? You might have 28 Bitcoin and be thinking this is irrelevant to me. What is relevant is the stop part. There are so many people stressed out in crypto, whether we're in bull markets or bear markets. It's like the in-between that I think is maybe the easier time when we're ramping up into a bull market. In bull markets, it's very stressful because like you're just wondering all the time, should I be buying or should I be selling? Like there's only good news. Why am I even considering selling? That's how people think. And then during bear markets, it's like, okay, there are these things that are blowing up left and right. Last cycle, it was exchanges. This cycle, like people worried about strategy blowing up and selling a bunch of Bitcoin. They're already selling small amounts. They're worried about Cold Card, which was like the Bitcoiner cold storage wallet that was supposed to be like the safest one out there, the best for hardcore Bitcoiners. All the very like Bitcoin centric YouTubers apparently were talking about this, and I'll be honest, maybe I'm not that deep into the weeds. I hadn't heard about it too much. I'd heard about Ledger and Treasure and a couple other, a handful of other hardware wallets as well, but like this was hardcore. But yet there's about 1,500 Bitcoin stolen, which it's a lot. It sucks that this was stolen, but you start looking at it, and that's less than 0.01% of Bitcoin. So it's like there's a very small adoption rate. Shout out to Brian Harrington for like reframing it this way. There's a very small adoption rate for this Cold Card wallet, and like the fact is, I think a lot of people get focused in on buying Bitcoin, and Bitcoin's kind of a religious thing too. So like you can be made to feel bad if you buy other assets. But like I've known so many people that have been like, I need to stack Bitcoin, I need to stack Bitcoin, I need to stack Bitcoin. I'm not buying anything else. I'm just buying Bitcoin, Bitcoin, Bitcoin. And while we're in a bear market, sure, like go for it. Knock yourself out. 6 months, a year, year and a half, maybe you want to keep on focusing on that Bitcoin goal. But a lot of people just continue to stack like for 4 years, 8 years, 10 years. And like, I think there needs to be this natural transition in life from like stacking one asset to stacking another to stacking another, and building up a financial fortress that's not just built on one asset. Because you could be stacking for 10 years and then all of a sudden you think you did everything right and Cold Card gets hacked and your entire net worth goes away. There's so many stories like this. It's the same thing with real estate. Like if you're only focused on real estate and you don't have extra cash, you don't have money in the stock market, you don't have any Bitcoin, like things can go wrong without you doing anything wrong yourself. There can be little things that are overlooked or bad luck that happens that screw you. Same thing like in the stock market. If you're 100% into one stock, no matter how much research you've done, being 100% Bitcoin is very similar to being like 100% in Amazon stock. You might feel very confident in Amazon, but something can still go wrong. So I think there have to be these times where you focus in, and you don't have to focus on everything, but you focus in on one asset that is that you want to build up. Maybe it's Bitcoin. Maybe it's VOO, the S&P 500. Maybe it's an individual stock position or a couple that you feel very confident in because they've been beaten down. Like I've done the last year in the Mag 7 stocks, the ones that I think are undervalued, like Amazon, Meta, Google, and Microsoft. And you can build those up and stay laser focused on accumulating more while still practicing like good principles and having cash just in case, and not over leveraging yourself, but focus in on that. And then eventually they'll probably go up and they're probably not the best deal anymore. And then you focus in on the next thing and the next thing, and you can cycle back through. Like I bought those stocks a handful of times where I went in heavy and then didn't buy them again for like a year or two. Then went in heavy, didn't buy them for a year or two. And those I think are the huge opportunities. And you just don't ever get to the place where you can be screwed, and just like the point where you've been stacking something for 5 years and have it be taken away from you. Similar to like if you've ever played a video game and let's say you have to like improve the character's different abilities, like their strength, their mental, I don't know, their magic setting or whatever, right? Like their defense. You don't just focus on one unless you're just messing around. You don't just focus on one throughout the entire storyline and only boost that stat. because then you're screwed. Like, you need some base in the others. And then even there, it's not like you spread all the points out all the time to all of them. Like, you hit a certain goal and then you move to the next thing and then you build that up and then you move to the next and build that up. I also think it makes more sense because then you can stay a little bit more focused and more knowledgeable on that one thing that you're trying to stack at the time. And yeah, another way, if you don't want to think about video games, let's say you're just trying to improve your life. Do you try to get as fit as possible at the same time you're trying to work as much as possible and make as much money as possible? And at the same time, you're trying to spend more time on religion and spirituality at the same time that you're also trying to hit your book goal, at the same time that you're trying to spend more time with friends and family? No, like you kind of just focus in on one thing at a time and then maintain the others. So I bring this to you, fully realizing now is probably a good time to be buying Bitcoin. We're around the 200-week moving average. We're near the bottom of the bear market. Typically, we would bottom about 3 months from now. I bring this to you just to start thinking this through. Like, maybe you want to hit a goal. Set that goal, right? Hit that goal. Make sure you're keeping it safe. Like, whether it is, I feel very, very comfortable putting my new Bitcoin in an ETF, not in cold storage. And I've been rotating capital away from cold storage for a few years. I think it's safer long term, but maybe you want to do it however you want to do it. But yeah, build up that stack, right? And then as time goes on, like, you'll learn more about other asset classes. I've been stacking the Mag 7 so heavily. I talked about on my second channel, I just bought something maybe a month ago, around a month ago, that is like a lot of people on this channel would scoff at. Like, would just laugh at me for putting money in this. And I don't think it's going to perform better than Bitcoin. I don't think it's going to even perform as well as S&P 500. But I put 6 figures in it. It's SCHD, which is a dividend-paying ETF. Now, why'd I do that? Well, I had extra cash sitting around. I've been investing heavily into the assets I like a lot. And I just felt uncomfortable below a certain cash buffer. But I realized that it's inefficient to keep as much cash as I was sitting on. So I put it into something that would help me feel more comfortable getting rid of the cash. So I put in SCHD. It pays a 3 or 3.5% dividend, depending on where it's at the time. It's like really boring blue chip companies. In a bull market, it's going to give me 10% returns. In a bear market, it's going to fall down less than other assets. And then if the bear market gets really bad, I could sell off some of the SCHD position, which is not down quite as much as S&P 500 or Bitcoin or individual stocks. And I could actually rotate that capital over to those harder hit assets. And like, it's super inefficient, but at the end of the day, well, not super inefficient, but it probably doesn't make as much sense as just buying the S&P 500, which will probably perform better, or even the NASDAQ, or putting a little bit into Bitcoin and then putting the rest into whatever I want. It's not going to perform as well. But mentally, it's helped me build up another position that I feel very comfortable with, that I know will do well or decently, I guess, in a bear market, and will pay me dividends throughout the years, the decades that I hold it. So mentally, it's very helpful. Is that everyone's cup of tea? No. For a lot of people, it might not make sense, depending on your income, depending on your situation, depending on your mental state. It might not make sense. But for me, I'm just in a certain place where that feels nice. That feels nice just to know that I have something that's gonna appreciate. It still pays a dividend. It's similar to what I would get at the bank in terms of interest, but there's some volatility that goes with it. It's mostly upward volatility, but it can fall down too. But yeah, everyone's situation is different, and I'm just at that stage where, like, I'm still stacking Bitcoin regularly every single month. I take up a certain percentage of my income and put it into Bitcoin, but I've also stacked a significant amount by buying it throughout past bear markets as well. So yes, I'm stacking some now, but there will be a phase where I just say I'm not stacking Bitcoin anymore until we get to a point where it's at a more attractive price once again. Like, when it goes up 100%, from the bottom, I'm not going to be buying it anymore. I'm not giving that exact like time frame or exact number as when I'll stop buying, but like it's fine to set that up now, try to hit your goal, and then rotate your attention to something else that's maybe at a better risk to reward ratio or just helps you diversify. So I realized a bit of a different video, not too much news here. I am still trading as well, and I'm getting ready for some bigger trades. I actually just talked to Connor Kenny. You might know him. He has a YouTube channel as well. He's done something similar where he's focused. I mean, he's investing into crypto and property and stocks, but he's focused a lot recently on the stock market. And actually, there's a cool thing that you can do with these exchanges that I talk about all the time. A lot of them have stocks on the platform. So Connor was actually mentioning today, he didn't even realize it. He hadn't logged into one of his accounts in a while. He was up 700% on an Amazon position. So he had put in under $1,000. It was at like $6,000 of profit here today, and he didn't even realize it. Like he opened up a levered position when Bitcoin was at, or when Amazon was at $205. So if you want to do something like that, you can do that as well. You can use leverage. I mean, it's similar in ways to options in the stock market, but there are different ways to approach it. With options, there's a certain price that needs to hit and a certain time frame. With this, it's perpetual, so there is no time frame. Of course, there are fees over time compared to options where you pay the fee up front. But yeah, it's a different way to approach the stock market that I think could be helpful for some people. I actually have some long positions open as well on different stocks on some of these platforms. So if you want to start trading, you can check them out. Again, Ubit, BTCC, and BidFi are all linked in the link tree. Thank you so much. I appreciate it. If you want to check out my second channel where I talk a little bit more about stocks, there's a link to it underneath in the description, and I'll see you in the next. Just a reminder, this is not financial advice. This is not legal advice. Do your own research. I'm never going to reach out to you either in the comment section or through any other means to try to get you to invest in something that I'm investing in or to send me crypto. Some links underneath the video are affiliate links. I may earn a commission, but this is at no extra cost to you. Of course, do your own due diligence.